Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. I'm Mastro, and this is your routine briefing. And it has been a bullish day so far. I think I read something like 9 out of the past 11 days, something like that, have been bullish, and have been bearish, have been closing red, and despite closing barely red, that's still, I think, a pretty interesting statistic. So we'll see what happens today. I am currently short just based on standard trade, half size, nothing too crazy. I'm not a big believer in any type of bear move, that's for sure. Just kind of taking the mechanical trade and seeing what happens. So let's walk into our warm-up document, see what that has to say, and get ready for Jerome's diary entry at 1400 Eastern Standard Time this afternoon. So I'm going to go ahead and switch screens, minimize myself here. My windows are all messed up, so stand by. I have like 3 windows here. I don't not really know why, but there we go. Do a little bit of that, a little bit of this, and see what we have going on. So, second, I'm trying to... Window sizing is a little weird here. There we go. Okay. Now everything is good to go. So let's hop to this warp document. We do have a bit of a different look today. So we were going for 4 straight days in a row of that open auction down and balance overnight inventory. But today we got a different open. So we do have that bullish open test drive, which is why I said right at the beginning here, I have that short position just based on mechanical signal, yet I'm not too keen on it until we do pop back below. I believe it is 44.47. Let me double check. Yep. Until we pop back below 44.47, the bulls, I do think, have an edge. So what am I playing? I'm playing, if you look at this warm document, setup 2. So if you go right here, I think we're just trying to balance, so we're chopping from one extreme to the other. I'm not really expecting that bull trend. Doesn't mean it can't happen. Again, I don't really crystal ball. I just look at my pretty candles and other things and listen to what they say. So I'm just playing that setup too. We'll see if it works out. Half size, kind of like yesterday. I played the same thing. It did work out, so we'll see if we get that today. And we'll see if we get that before the minutes come out. So that's going to be at 2 Eastern. Right now, we are pulling back a little bit, so that makes me pretty happy, and we'll see if that holds. Again, 44.47 until we get back below 44.47. The bulls do have what I think the momentum. So did have that down and balance over to inventory. Really nothing too much to talk about there. By the way, if you're unfamiliar with this warm-up document, this is available in the description of the video, along with all the other links to my strategies and so on and so forth. You can find them there. One more thing on this document is checking out the expected move. So today, for once, we opened within the expected move, not near the edge. So again, kind of lending to that setup to hypothesis, we'll say. One interesting thing I do want to point out, though, is we had a really nice, if you like to trade the opening break, we did have a really nice demand grab. So I'm going to direct your attention to this picture here, and I'm going to drag over my newsletter that I'm working on, a little sneak peek. Still working on it, but this is a bigger picture. You can see it here. If you look at the tape pre-market, go to the execution chart, that's where it's most clear. You saw that we had that nice looking demand grab right there. there's a demand grab, and there's the pop. So we didn't quite hit the quote unquote target, which would have been right above here, right near where my stop is. And the reason I just hopped in before hitting the target is you did get one of those very significant candles. If you look at my routine day trading document, you'll see the candles that I look at, and that is one of the significant reversal candles there. So we'll see. Like I said, half size trade, not extreme confidence on that. Definitely could have that continuation as bulls try to reclaim what I see as the daily sentiment pivot here. So if we go to that structure chart, I'm going to go ahead and take the trade mode off, get rid of some of these lines like this. So the weekly sentiment pivot, let me actually drag my newsletter back over here so I can peek at it for notes. Okay, so the weekly sentiment pivot is this blue cyan trend line. I've been talking about that all week. That is very simply just drawn, excuse me, drawn from the March lows. If I zoom out here, show you what I mean. There, drawn from the March lows, nothing fancy. And I think that just generally speaking, below that, we have more of a bearish lean in the market, and above that, the bulls kind of have control. And then just kind of getting a little more granular, the daily sentiment pivot, so cyan being the weekly sentiment pivot, daily sentiment pivot is somewhere around this yellow trend line, somewhere around that overnight high. I think above that, we are going to be generally bullish going into the meeting. So it's meeting minutes, it's not a meeting itself yet, it's still a red event, still very market moving, so anything can happen this afternoon, and I do trade around these minutes. I trade it like a normal day. Yeah, it's important to keep in mind that once that does come out, anything can happen. So first be watching that daily sentiment pivot right about that overnight high, and then the more important weekly sentiment pivot, which is that cyan trend line that you see there. So assuming that the bottom is not in, and assuming that we're going to continue having a couple red days before turning around, the question becomes, where is the new magnet? So SPY 443 gap, that was the level that I ranted about for I think several weeks, possibly more than a month, possibly 2 months. I'm not really sure how long. Been ranting about that for a while. We did finally get that gap fill yesterday. So now it becomes a matter of, do we bounce here, find spot to bounce, or do we continue moving lower to the next magnet? So right now that magnet is about 4400 area, 4400 to 4405-ish on the ES. I have that marked on this chart as a magenta rectangle, and really it's better, or more important / salient, whatever the word you want to use, on the weekly chart, because that is where the top side of value is. So keep in mind, if you've been watching these briefings, we have been in a state of imbalance for let's see, really since June. We kind of emerged from the balance. We've been in that state of imbalance, trying to build new balance, not the shoe, but the value area. And right now the top of that is going to be 436, and that is what I see as the magnet, so long as we're below that March trend line. And we'll see what happens. So that's really going to be a really big level, something to watch as we move forward here. Again, we don't have to trade that. I think that value can, I don't think, I've seen it. Seen it with my own eyes. Value can continue to move up, and in fact, it started at 433. I don't know if it's been a few weeks, but we'll say when we started to emerge from it, it's been climbing and climbing. So it can continue to climb as we consolidate. Yet at some point, I do expect a retest of that, and right now that level is 436, about 4400-ish on the SPY. So that does correspond real nice, I would say. Besides that, I will direct you to the newsletter available at retailtrading.com if you're not already a subscriber, where with all the pretty pictures and more granular levels and such, you can find it there. So really just generally looking at TPO, what am I expecting today? Well, now we have this poor high, so I'm kind of just expecting, again, not crystal balling it, just if I had a guess, and if I was a betting man, which I am as a day trader, I would say we kind of consolidate between this poor high and poor low into the meeting minutes. Again, if we lose 44.47, maybe the bears take a run at this naked POC around that 44.35 area. Yet, given volatility, which we'll look at in just a sec, I do not think that the bears are going to have any extreme initiation really until we get back above the sentiment pivot for volatility on the daily. And where's that sentiment pivot for volatility on the daily? Well, that is going to be right at about that 18 area. So you can see we've been consolidating. We popped back into that triangle. You're consolidating to the downside. Even with that big move yesterday, you did not see that initiation higher. You did not see really any type of big strong move in volatility. So until we see that, we got to consider this divergent relative to price. And again, that's just kind of lending to the bull case that maybe our friends, well, not my friends, but maybe your friends on the bull team might get a bit of a relief rally here, a nice little squeeze to clean up some of the structure above. We'll see. I'll be watching this closely. Again, it's not it's kind of becoming a tad irrelevant as it pertains to just these scalp trades, these intraday trades. Yet again, something to watch, something to keep in mind. Volatility not making higher highs, market making lower lows. That's called divergence, and that does lend a little bit to the bull case. So we'll see what happens. That's all I got for you. I'll be back after we have our meeting minutes today. Maybe it'll be nothing burger. Maybe it'll be super exciting. Regardless, I will be here ready to trade, assuming that this morning's trade doesn't work out, and ready to watch, assuming it does. So speaking of watching, if you watch this and found it valuable, I'd appreciate that thumbs up. The likes do help that YouTube algorithm and our quest to sustain double-digit viewership. So I appreciate that. I appreciate your attention regardless, and any engagement that you might provide, be it responding to that newsletter at retailtrading.com, the comment section of this video, or on Twitter where you can find me at Routine Trader. So once again, thanks for your attention. I'm going to go hop on Twitch, so if you like those rough electronic music transitions, you can come hang out and do a quick set there. And if not, regardless, stay classy until tomorrow.